As fears arises that the Fed will taper, the easy money might be ending, and also the ECB is indicating that there might be an end for the easy money flooding we have seen in the markets. Maybe there's a chance for the Far East markets, for example, China and of course Japan. We have seen the Nikkei rising strongly. Let's have a closer look whether this is the best chance to enter the market now and where it might lead to. So stick with me and check what the market is telling us. Yes, I've mentioned before, some people are changing their minds about the US markets. Maybe it is getting more and more dangerous to invest in the Nasdaq, for example, in the Wall Street, because the Fed is indicating that tapering might be nearby because of the inflation risk and all these things. And also the ECB is telling us a similar story. So maybe it's not the best choice to enter the market there and to put more and more money, because nobody wants to be the last one investing money and seeing that the market is turning and not gaining anymore. We have seen some really strong movements in the Asian markets. The Nikkei, for example, of course, it is in relation with Suga's announcement that he does not want to continue. His ratings have been going really down in the past, so he decided I will not do this again. We have some follow-ups there. We have some information about the successors, some indications that there might be a strong stimulus coming into the market and leading the market to higher grounds. This gave the Nikkei the wind beneath the wings to lift off, and this is not only a small movement, it can indicate there's really big move with tons of new points on the bull side coming and pushing upwards. Nikkei 225 in this case, and I've mentioned before, we've seen a strong movement here. This is an hourly or the 4-hourly chart. You can see this is a strong movement, and the first thing we have to keep in mind is that the market is or did break already the downtrend we've seen here from February this year. So this is a strong indication that the market is really pushing into a new direction and is willing to continue. There are some other points we can have in mind. This is the last low. This is the previous low. Here's on the same level here, maybe roughly around this one. This was an early indication, maybe. In my eyes, it's normally a little bit too early because it's within the trend channel. However, this is an early indication, and this one is also an indication that the market is pushing through these levels, indicating that this part of the chart is over now. And you can see this is not only gaining, it's also strongly gaining. It looks a little bit like something like a 5-wave pattern we normally like very much. I'm not sure this is the fourth wave here, so we are still in a 5th wave here, currently leading us to higher grounds. I'm not 100% sure that this is the 4th one because it's a little bit slower or smaller than the previous one here. But we have a strong movement here to the upside, indicating that after the next big corrective pattern, bigger than this one, we will even see some continuation, because normally movements like this, however they look, but in this way, they're normally not coming alone, especially after a corrective phase here. So we have a high chance that after some break, maybe in the next few days, I'm not 100% sure when this occurs, but when the next break is, that we can have a continuation. It looks a little bit similar to what we've seen here in the bigger screen. You can see here on a daily chart, strong movement, a shaky to the downside, and a continuation. The idea behind that is exactly the same. After the break here, we can see some kind of continuation here to the upside. So it is not talking about only 30,000 or even 30,100. 31,000 or 32,000. We were talking about a continuation in the big picture, which may lead us even to higher grounds, let's say 35,000, let's say 38,000, or even to 40,000, measuring this part here of the chart and seeing that a one-on-one projection will even lead us above the 40,000 level here in this case. But is this a must-have? Is this sure this will happen? Of course, it's not 100% sure, but chances are very high that subsequently the market will lead to really, really high grounds here in this market, especially after the Bank of Japan is always putting fresh money into the market and just waiting for the government to join the party, to do their part of it. So when both together are giving stimulus into the market, we can see what we've seen in the last few months in the American market, really strong gains pushing the market higher. So I think there is a good chance that we can see this with the Nikkei 225 as well. So the question is, can we just buy it? Is this a perfect situation to buy it now, or shall we wait a little bit longer? Yeah, to be honest, when seeing something like this, a movement strong like this, I always want to see some kind of a setback, because where do you want to stop this? Of course, if you just want to buy and say, I'm just buying, I never think about the other side, the market is turning, it might turn around, whatever. Yeah, then you can of course buy at any place, at any price level. But to be honest, this is not the very smart way, because you don't have your risk-reward ratios in mind, and you know that trading is always dealing probabilities. And there's a strong chance that the market, of course, can do something completely different from what we expect. For example, there might be some earthquake, to have something like this on our list. It could be something like a war or similar situation, maybe with China or whoever in the region. Of course, I don't hope for that, but we cannot deny that this might happen and turn the market around, and this may be really cost intensive. So we should keep in mind, what would we do when the market is turning or not continuing? Or if not, Kishida, for example, one of the probable next prime ministers in Japan, will be able to introduce the new stimulus. It might be that he says, no, I changed my mind, I will not do that. And this, of course, can also turn the market. So there are some reasons why the market can turn. Currently, nobody's expecting this. This market behavior is indicating that the bullish people in the market are really strong, not expecting anything worse. When the market is coming down from that level, it can be a little bit from a higher level here, but when the market is coming down in a corrective shape pattern here like this, then we have a good continuation idea to the upside. There's only one thing I want to keep in mind, and I want to stress in this situation. Normally, a setback is reaching the area about the 38.2 level, which is far away from the lowest point here in August. So this is a little bit too high to satisfy the need of a typical corrective pattern, which would lead us to this level. So if this is not the case, if this is not the complete correction from this one, we will either get a 1, 2, 3, 4, 5, and then a bigger corrective pattern, or we will have a not ended corrective pattern ending in a situation like an ABC, something like an ABC, coming down a last time and then continuing to the upside. Both patterns are also very, very typical. So it is too risky in my eyes to just buy the market and say, no, we definitely will go there. Yes, I'm quite sure we will have a good chance to reach 35,000, 38,000 or whatever it is. We have a good chance for that, definitely. But I don't like to stay in the market when we get something like this I've mentioned here, or when the market is giving us a 1, 2, 3, 4, 5 coming down, and after this is continuing to the upside. So what do we do in this situation? I normally go to a lower time frame, for example on a daily chart, for example on a 4-hourly chart. It's not necessarily intraday, but to see a little bit better the structure. So the next time the market is coming back somewhere into this region here, 38.2 to 61.8. Currently, it is roughly 29,500 to, let's say, a little bit higher than 28,000. And that in an ABC pattern, or alternatively in a shaky way, a typical corrective pattern, then it is, I think, the best situation to say, awesome, this one was indicating we're in a strong bullish situation. This one is indicating that this is a counter movement because it's a corrective pattern. So after that, we can at least expect that we will get something like this again. So even when not reaching 40,000 in the first instance, we have a chance to strongly leave the area of our entry. So we can leave the situation here when entering the market here. We can leave this levels here and gain higher 1,000, 2,000, 3,000 points, or even higher than this one. So I strongly recommend, if you're not 100% sure that in your opinion the market has no chance to fall back, and this is, we can never exclude this idea, then I would definitely, and that's what we do in our trading style, we would definitely wait for a setback and enter after the setback, especially when this is in a corrective pattern. You can imagine if the market is not coming down in a corrective pattern, just imagine the market is doing that. This is a clear indication it's not corrective. Corrective is ABC, and this is looking different, or is something like in a shaky way. Both is also okay. You can see here this one or this one. This was a shaky one. This is not easily an ABC pattern here, what you've seen here before, but it's also a corrective pattern here. But you cannot misinterpret this one and see, okay, this one is a corrective, and this one here is a strong move to the downside. So as long as we get something in the corrective pattern, this ABC size or this one into this area here, it would be lovely to enter the market on the bull side. I would not enter the market at that level now because the chances of a setback are too high. So I would wait for this definitely. Of course, if you're not sure when to enter the market, please check for follow-ups here on this channel, for example. But you can also check for this or this pattern and enter the market after that. For example, when breaking through these levels, you can see it here or here, when breaking through older highs here. And this is indicating, okay, the downtrend is over. We can think of a continuation to the upside for higher levels here. And this may be the perfect situation for maybe this level. But even if the market is in this kind of pattern, an ABC down, ABC to the upside, you can at least expect something like this, reaching 32,000, maybe 33,000 or something like this, before turning back. And if this pattern will occur here, even in this case, you can have the same idea, the same situation here, maybe a little bit higher before coming down. But you are safe because you have a good opportunity to enter, a good situation to stop the position if it's turning around, and you have a good risk-reward ratio on that as well. So far it's the Nikkei, so it's a good opportunity. I think it's not the perfect time to enter the market now, exactly now, but you should have a closer look at this one. We will definitely have this. So let's switch to the Shanghai Composite Index, which is also in a very nice position. Overall, a little bit different from the Nikkei, but however, you could see that the market came down a corrective pattern, staying above this overshooting situation here from March 2019. You can see this is the 3,300 level. We have been over this level. We never touched below that. So this is a good indication that the market is strong. And the lower time frames, for example, on a daily chart or even on a 4-hourly chart, is indicating exactly the same. You can see we had a 1, 2, 3, 4, 5 wave pattern, an ABC to the downside, and normally you could expect something in the same size as a minimum. So entering the market above the B level here, the intermediate high here, indicating that the market will reach this level at minimum, and we were overshooting already. And this overshooting is giving us an indication that this one is longer than a one-on-one. Normally it's a one-on-one, same size, in a corrective pattern. But now we were overshooting, and the more we are overshooting, the more realistic is that this is not an ABC pattern turning around. No, that's not what we expect in this situation. It is more likely that we have a 5-wave pattern continuing to higher grounds. The disadvantage in this situation is we were already in a 5-wave pattern before, and you can see this might be the first, an ABC to the downside, third something like this downside, and the 5th wave here to the upside. We have some issues here with the middle part. It could be something a little bit different from what we're drawing here. However, I don't want to stress this too much, because the issue is we should continue to the higher ground here anyway. But this is should be the last part of this movement. So I see a good chance that the market is not continuing forever to higher grounds, but is just for a small moment here before turning around in a bigger corrective pattern. I cannot name the level. It can be 4,000, can be 3,900, it can be even 4,500 or something like this. Currently I cannot name it, but the chances are quite good that we are currently still in a bullish mood, and as long as setbacks are ABC shaped or in something like a corrective shape pattern, this is also a good opportunity to buy the Chinese market here with the Shanghai Composite. So nevertheless, both markets, the Nikkei in a really strong fashion with the high targets, really high targets, or here the Shanghai Composite also in a good position for higher grounds, but with it's not sure where the targets for these movements are. If you want to jump into these markets, wait for corrective setbacks, buy the market, trade the stop to your entry so that you're out of risk, because this one can turn stronger at any time than I would expect with the Nikkei 225 currently from the current pattern we've seen before. However, both markets are in the bullish mood, and I see a good chance that we can race to higher grounds. So even that market, the Shanghai Composite, has a chance to gain more and more and outrun the American market, especially when the tapering ideas will come closer, and the idea that the Fed will not put too much easy money into the market anymore. How does this compare to the Hang Seng, to the Hong Kong market? This one is completely different. Absolutely not comparable to the both other markets we've talked before, because the 4-hourly chart, other than the composite, the Shanghai Composite and the Nikkei, we have an overlapping here. This setback here is overlapping with this setback. This one is higher than this one. So this looks like a typical corrective pattern. So I'm quite sure that this is not a good opportunity to buy this situation. And to bring the bigger picture into view, you can see we have a strong movement to the downside. Even here we have something quite strong here to the downside. Currently maybe something like a corrective pattern here. This is always not leading into a good situation here, especially because this one is below that level here. So you can see we have some overlapping in the big picture here as well, which is also indicating that the big movement we've seen before is over or just corrective. So all indications here are leading us to the idea that the Hang Seng is not in the best situation to higher price levels. So if you want to buy Asian stocks, if you want to buy the Nikkei or parts of it, if you want to buy the Shanghai Composite or parts of it, it seems to be a quite good idea, especially after some kind of a setback. The Hong Kong Stock Exchange, the Hang Seng in this case, the Han Seng index, is not giving us a good indication currently for a buying situation, because it is looking really corrective. It's not in the same mood like all the other markets. So I would stay out of this market here, or even think of selling short parts of it. I'm not seeing a good opportunity for a short sell of the index currently. Some people may think going below this level, because we have an ABC pattern here in this case. And if you say, yeah, but isn't this also a 5-wave move? Even if this is a 5-wave move, we had some kind of overlapping here. So currently it's not the best situation. The only thing which might occur is it might be something like a leading diagonal. This is the only chance. If this is only coming down in a corrective pattern and overshooting, then maybe this might be a chance to buy that. But definitely you have to wait for this one. And even then, I would stay put here in this market, waiting a little bit longer and waiting for some kind of confirmation before entering here on the bull side. Because typically, this is something looking very, very, very corrective pattern-like, because overlapping in the small and the big ones here. So I would estimate that this is the better chance, but I would not sell short the market currently, because it's the last wave to the downside maybe, and after that turning around for a bullish market. So in this case it's more a wait. In the other both cases it's also a wait, but waiting for a corrective pattern to enter the market a little bit more aggressively. So I hope this finds you well. I hope this is helping you with your own trading decisions. This is just an indicational thing. I just want to give you an idea how we look at the markets, how we can deal the current situation, how we think the situation is currently here. So I think we should keep in mind that this is giving us a good opportunity for two markets at least to have a closer look. Let's see what the market is giving us. So good luck for your own trading decisions. Maybe we can have a follow-up in the next few weeks on this one. Crossing my fingers for you. Have a good time.